Good morning, good evening. Checking news. Had quite a move yesterday, huh? How exciting. That was FOMC, right, I'm assuming. That's how on top of it I am. Of course it was. It was for an extended period of time, too. And we'll take a look at everything. Obviously, my trail is hit on my AU short, so I'm not in any sort of trade right now. The news we're dealing with today is for the Swiss. That's in 20 minutes. High impact news in 20 minutes for the Swiss. We don't have high impact pound news. We have some light news in an hour for the euro. Economic summit is today for the euro. Busy New York Open as usual, New York news. There's a lot of stuff going on today, news-wise. As of yesterday, wasn't spiky enough. Volatile. Yeah, there's a lot of meetings and talking and summits and speaking. Yeah, there's a lot of that today. So, that along with the fact that yesterday, we're coming off of those moves, we'd have to say it's a little more of a dangerous environment. It is what it is. It's not a typical day with that to our left. But we'll take a look. And all this stuff going on. Okay. So let's look at the charts. All right. So what happened? Anybody have any ideas about how to read this? It took me a second. I looked at this and I go, this is not your usual move. It took me a second until I could properly define what happened here. Does anybody have any theories? What do we do going forward? What does it all mean? Oh, we have an answer. Oops. And it's Jeremy. Mark up for resell-off. Yes, sir. It's just a big old version of what we've been looking for anyway to get into downtrends, right? Yep. The news obviously brought an up move. I would, without even looking at news and knowing fundamentals, and I don't care, the herd reaction was to buy in very large amounts. It was a big consensus, okay, buy, or basically dollar weakness, sell off the dollar, either way, right? But all the way up, they're selling into it. Now, who does that? Who behaves in that way? Selling into a buy frenzy. And then if you just kind of look at, of course, the way this ended up and the result of all that activity, there's no follow-through. I mean, there was aggressive buying, but it was getting hit with selling, and we know who's who. And I just know that the news suggested the up move, and there were others taking the other side of that and selling into it. Yeah, I mean that is way after news, right? But look at the amount of activity to stop the up move. It's a sign of weakness, Higher prices attracting sellers, effort versus result. It's all there, right? So, yeah. I'm actually looking at the 1 minute chart just to see that the high volume did occur at the high price area. And yeah, you see that. And then later, this is way after news. This is Asia. Look at that. Just to really get in there. This high volume led, look at the result. Usually they're going to be selling to an up move, but something made them sell here a little more aggressively there. A little bit of demand. And it's hitting some demand, which is good because I wouldn't want to chase this. I would like to see an up move. And this is basically going for all the dollar pairs here we're talking about. Oh, but check this out. If you go to the 4-hour, and this applies to at least the pound as well, draw the fib. Starting to look pretty normal now, right? Well, we're in a downtrend and it's retracement, and we're looking to sell. See the volume, you see the pin rejection, you see the reaction, and the pound dollar. There it is again. And this was actually, if we were talking about getting along on the pound on a fake breakout and having a nice big target. Remember we were talking about that? Because we said, well, okay, we're starting to see some buyers. It's possible, it's realistic. I mean, this is a serious, downtrend. I was talking about hopefully getting a fake breakout, going long, and catching a big retracement. That fib I already had drawn yesterday. Shit. But it was on the news. So what are you going to do? Not going to trade news or trying to catch that. But that was actually the trade we were looking for down here. Yeah, shit. It's been like these near misses with the pound lately. If it just happened in a slightly different way, I would have been able to get in. So obviously on news, that's not the usual case. But in the end, again, it's the same thing where really we have to take this as a sign of weakness. I do want to see how it behaved down there. See, there wasn't much saying it was bullish. I mean, that's why we're still bearish. There's the breakout yesterday. And when we saw that it wasn't becoming a trap move, right, we predicted that this was not a trap move on news. This was not a sign of strength because the lower prices after the news were accepted, so it was still bearish, and then it continued down. But then the news did this, and again, the selling into the up moves. That's what I'm talking about. The closer you look, you go smaller, smaller. In the 1 minute you see it. Should be able to here too. Yeah. See the high, look at that volume right there. And then look at the result every time volume is increased. Here's where the buying came in. But then they started sort of matching it. There's a little increase down. Here's an increase, this general area, and it led to that. Here's the highest volume of that whole section. Then that happened. So then we have that, and that stopped the progress there. Hit some supply. And then that. Very high volume and completely stopped it there. And that's in the fib zone, where you would expect high volume sell-off if it was just a regular old thing, right? And the 1 minute showed it right in there. That's where they sold. So, yeah, we know who's who. We know who's doing what. Whoever went long and thinking the news is turning this bullish is going to be, mistaken. So says the chart right now. So going forward, again, it's shorts. But it's good that we're seeing some demand starting to come in because we need some sort of retracement. I mean, again, we find ourselves kind of lately getting into London Open with the direction that we expect sort of running off again here. Typically, it's like not, maybe we should start an hour earlier. I don't know. Hold on a sec. But that's just the mood of the market right now. It's in a rush, right? That initial jump in volatility, like right before London Open, in the direction that you kind of expect off the background, which is not providing opportunities, right? Because who the heck expects that to happen on a regular basis? But that's how it's just been behaving. But again, if we can see some buying come in, that's probably a fib right there. Yeah. So if we can get some sort of up move and weakness again, what would be the setup? I mean, it's a little exaggerated, but so far, if you just apply everything as if it's a normal thing, it does make sense. Things are snapping into place, the fib, the volume where it should be, and all that stuff. So, it's this whole area, which is unusually big here, but it could give a setup here. It maybe wants to go up there and do it, but I can see that it could give a setup here. That's where it becomes at least the zone. It's exaggerated in this case, but so be it. That's still the way to go because it was such large selling in here that I would still take this as a proper zone to draw that box, and at the beginning of it, start to look for the setup from that point. If it just runs down in a straight line, I'm not going to be in it, but that usually doesn't happen. That's just one possibility. And all this basically is going to apply to the other pairs, so I'm doing this on GU now, but we're looking to sell in the retracements, not chase it. Here again, just to mark a smaller fib area, just kind of know in advance where our opportunities may be. So that kind of lines up with a 50 fib also. The line that I just drew for the box for the zone is also a 50 fib here if we move up from this point. So that is definitely reasonable as far as if VSA agree. Yeah, technical analysis says it's an area. So if VSA agrees when it gets there with a sign of weakness, that's something that would work there. A good situation. But again, if it just runs down, I'm not going to chase it. I'm not going to chase it. You could technically take a no demand, but I'd rather not do that kind of stuff. Yeah, what's the basic rule to draw a fib? To draw it over the trending move. Wherever you think the trending move begins and ends. So you'll keep seeing me doing it based on that. If you were short EU, would you exit now? I probably would be trying to ride out. No. Maybe partial profit, but there's no reason to say, no, I don't want to be short. No, we're talking about getting in short. You're up 140 pips? Cool. So you read it right as a sign of weakness and you found your way in? At what point did you get in? Was it New York yesterday? After the news? Cowboy. Eight-ish? Oh, we're in the same time zone, so 8 p.m. Like Asia Open. Oh, almost. Well, very nice. It keeps doing this, session opens and it runs off. We keep seeing this every day in the direction that the background suggests. So it's kind of killing the opportunities, but it's not going to be like that forever. It's kind of annoying, though, lately. Because you're like, okay, everything's bearish, and I'm just watching it drop. It's like, okay, I'm right, it's going, and the only way to get in is go, well, it's going to be London Open soon, I'll just sell. I mean, it's literally the only way if you're just looking here. I don't like to really get in, and maybe Asia Open could provide an entry, which it looks like kind of gave a sign of weakness there in the zone. And that's AU. But, yeah, it's all correlated. It's the dollar driving this. You start, looks like push to some sort of AR. Started out with huge stop loss. That's like, well, if your position was small and your risk was in check, it's actually reasonable because it's just such an exaggerated move. But it does suggest the trend continuing. So, your risk, your reward could be big too. But just don't over risk. Wrong time of day, yeah. You don't want to do that on a regular basis. So that's the deal. We want to look to get short, and it's just running off again. So we'll usually see some sort of retracement. It's like the same pattern every day, right? It starts to move before London Open. But if we were to jump in, the retracement's coming soon, right? Then what happens after the retracement? It gets really slow. That's the way it's been. What a shitty phase, right? Jeremy, okay. I gotta say, that's a new twist. this phase that the market's in now of jumping the gun early and running off in the obvious direction, so you don't get an entry if you're looking for a regular setup during regular time. But if you end up jumping in and chasing it, we've seen retracements come. But then after the retracement, when it goes to sleep, it kind of gets stuck in a range, right? It's friggin' Groundhog Day. That's not the usual behavior. It's really not. Then we get like a little news activity, but nothing really happens that's spectacular. That's been the case. Been getting trades. This week it was out at break even, right, on the first one, and then the AU was little trade. It didn't run off because of this damn news. Last week was 3 for 4, but they were all small because things were just not moving, or moving at weird times, or whatever, like this crap we're dealing with now. The timing is a bit odd right now with things. Start off with a bang early, get slow, get jumping on news, but don't go anywhere. It's seriously like, how many days have we seen this already? Trade goes up 18 pips finally. Then it hits some friggin' buyers if we're short, and then sits there. It gets late in the day. I'm getting tired of this routine. I guess taking little bites is better than losing, but, I guess the market's in charge. Look at the EJ, how it's completely reversed the entire move. Talk about effort versus result. Think about all those people that went long. Not good. So, why did this have to happen so early, these moves? This is London Open here. So the activity picked up exactly an hour before. That's when we normally would start as far as Eastern time. Is that what's going on? We're starting an hour later. Nah, because it still just goes. It's just, okay, time to go, and it goes. I'm getting tired of this routine, really. Okay, hour before London Open, sell. That's it. It's like they want to push it before it gets too active and with buyers and just get it down. And then they start running into buyers and it retraces and all that crap happens, like right there. Man. But again, some of these pairs, are showing potentially demand coming in. So it's still a bearish environment, and the demand could actually give us, a retracement to look to get in short. That's the point here. I'm not just going to sell at this point. See, demand coming in. So let's see if we get an up move. I mean, even if you wanted to aggressively short, you wouldn't do it with that happening, right? So either way, there's nothing to do right now. Just look at those rejections. So somebody's buying into that. Is it going to really stop the move? We'll have to find out how aggressive the selling is right now. It's going to end up being a fake breakout, retrace, and give a short entry. If it runs off, it runs off. It's like if you wanted to chase these moves more aggressively and still do it properly, you could be taking no demands or whatever. Like there's a no demand and a nice test of 14 EMA and low volume, right? That's our routine stuff there, looking for an entry. If you're going to do that, at least don't do it when there's big demand showing up like that. because now it's like 50-50 or 60-40. That's going to get some sort of bounce now because of that. But if that's not showing up at lower prices, then at least you have the environment where you can do that stuff. Of course, it makes sense. So a lot of these are not even saying that that's the thing to do here. So you can say factually, it's weekly pivot, it's S1, it may be something else too. Whatever it is there. And certainly some buyers just showed up. Seems to be kind of ignoring that fib. I won't worry about that. So maybe we get a retracement. If it doesn't bounce here, then we just have like sellers just running over these buyers. Because they did show up there at a predictable point. So if the sellers don't pause their sell activity, test for buyers, right, let it get a little bounce like you would normally see off of that, and it just keeps going down, it's very, very aggressively selling off. So we can find that out in a few minutes. I shorted at 245. Is that any sort of legit entry? Fin FX time. Basically, it's between London Open and 16 GMT. Maybe Asia Open. That would be the best time to sum it up. 2. So you're a couple hours into Asia. If I'm trading Asia, it's typically, which I haven't done in so long, just at the beginning when things pick up a bit. And maybe you at least get a scalp because it can sit there and get stuck until London Open. That happens a lot during this point. Like sideways, nothing. So if you're getting in during this time, then it's kind of like shit. You better just go in your favor. You're lucky it's in this phase because it's just London Open and it goes. You know, during other times, it's bread and butter trades. People that have been trading this method, a little while. If you have a downtrend weakness in the background, you're looking for a fib retracement. You're looking for an up move. And so often the sessions will start out, and it may even be good news that helps it with an up move and a sign of weakness in our entry. So that's going to happen again in the future, I'm sure. It's just this weird mood that it's in right now. EJ, yeah. A little buying happening. What are they going to do? In a normal situation, in a bearish environment, that's normal. As opposed to some crazy sell-off that may be starting here. I don't know. The sellers here would pause their activity, right? So they see the buying, and rather than trying to fight it and keep selling into buying, they allow the buyers to bring price up, get committed, get out of their way, and at some point we expect them most likely to start selling into it again, and then try to go for another leg down, get it back to this point. So if this stuff doesn't stop the progress, we're in some serious sell-off, just run over the buyers, running them over. After the news move was up, which is funny, but we can read it. It says weakness. It's just exaggerated, but it's a typical trap-up move during a downtrend. It's all flamboyant. But it's the same old thing. Took me a second, though. I'm like, wow, I don't know what to make of this. It took me about 15 seconds, maybe. I was like, oh, okay. Because also I was thinking, the more rare situation that you'll see to end the trend, as far as this potentially being like a bullish environment, which obviously we've concluded that it's not, more likely you'll see a sign of strength on a down move, climactic volume and all that stuff to end the downtrend, right, at some point. But on the more rare occasion, and it could be off a fundamental reason or sort of a surprise thing that wasn't so planned, like regular accumulation and all that, would be really just sort of dumping the short positions, which would give you moves like this. It happens like 2 out of 10 times or so. Like a trend will reverse in that way. But then you go forward saying, okay, they bailed out of their positions in that way, and buying started to come in more of a spur of the moment thing rather than taking profit into a down move and giving a regular sign of strength. And you still wouldn't chase it. Going from there, you'd be looking for regular long entries, fib retracements, and long entries. But the higher prices need to not show sellers for that to happen. It would be that really the candles are closing at their high, and the signs of weakness really shouldn't be sticking out like that in a fib area. If it was really just aggressive buying, dumping of short positions, a real sudden change in bias off of surprise fundamentals or something, if that were the case, this would be not standing out and stop regular sign of weakness. But you have to. The point being, though, you have to acknowledge there was a lot of buying, and it was during a downtrend, but it must have been a real convincing situation to have the herd buy so confidently. They must have really pulled a number on them, right? And now look where they are. Oh, gosh. Not good. EJ? Not good. On EJ, all the buy positions from the news move are now in drawdown. Pretty much all of them. Immediately the next day. That's really funny. It's like evil. So how's that demand that was showing up, starting to show up happening? Okay, see there. Again, it's not to look to buy, obviously. It's just to hopefully, to give us a retracement to look to sell. See, it does seem to be losing the sell activity, which would be wise of these sellers. Just back off and then let it move up. Get these buyers out of your way. Unless it's just going to be really aggressive, but hopefully it'll be normal. So far, to see it pause here is good. It's the routine, right? It runs off and then it retraces. See that if that ends up being a quick fake break or a break test continuation. So yeah, there's really nothing to do but wait for a retracement. And again, if you're looking for more aggressive short entries without a retracement, you would want to see lower prices starting to come in without demand showing up. And at this point, it's really just chasing the move. But if you wanted to, like if things start going through here and start continuing down into new low ground, and there's just no signs of strength coming in, and you get a no demand, you could, that's technically the entry you would get. So I'm just telling you. Or a basic sign of weakness, some sort of, there's different names for it in VSA, but some sort of up move showing weakness. But I'd rather wait for it, even if it's a retracement to a fib on a 5-minute, like some sort of retracement. Because the idea is on a retracement, you're seeing fresh selling from smart money coming in a fib area, whatever, right? So if they're adding fresh short positions, okay, then I'll look to get in. And the other reason is, again, new low ground that you haven't seen is very dangerous. Just to sell and hope that the buyers won't be showing up. Euro dollar, you'd be selling into a weekly pivot S1 and a sign of strength. And here, again, you see like a no demand test here. This is business as usual, no, low volume test, 14 EMA, and it continues. But it's not long before those buyers show up. You just never know where they are. Things go up and down. They don't go in a straight line. So, timing the entries. So that's why I don't chase it. Okay, so hoping for some sort of bounce to give a short entry on a retracement. Obviously, even, wherever that weakness may come in, it could be up at the higher levels we had marked. It could be, if we're going to bounce from here, we have a little fib. I mean, something. The higher the better, but if it sets up there, it's still better than trying to sell down here, right? Some sort of confluence levels and seeing sellers come in. If it's going to bounce, I can even draw that. It's hard to overdo the fibs. Every swing can have a fib as long as it's the entire move and not sort of randomly picking points. Like that's the previous swing there, or you can get the entire move down out of the range there. Those two I would say are correct. But you're asking about fibs. Like I wouldn't draw it just like picking random spots here or picking random spots in here. It's obvious trending moves to measure a retracement of, like entire moves without any extra. And that kind of snaps into place, right? This line I had already drawn. Weekly pivot 618. I mean, that's something, if not really much to ask for. This really feels like yesterday, doesn't it? Remember, or the day before, it kind of went right there and then dropped. It's like all we needed was like a 2-pip move into fib zone with a weakness, and it just kind of went there and then continued. But that's the pattern. The way things are behaving, that's probably going to happen, right? It's just like Groundhog Day. Kind of feels like that's what's going to happen. I'm just, blabbing here. Everything's wait and see, but be prepared. Of course, if it goes down lower, all these fibs will have to be redrawn. Things are very clean, though. Again, the snapping together stuff like this, and then the weekly pivot there, and then on AU, that ended up being 50 fib. That'll probably meet up with the 50 EMA right there and come together. But the exact, and again about drawing fibs on the entire trending move, now I know that this level is 50% of the move right there. And it's just interesting that it acts as a resistance right there. It kind of tells me that things are clean. So that would be the soonest possible trade. Of course, we're talking about a sign of weakness potentially has to come in there. It doesn't have to be huge volume. We're going with the background and all that stuff, but I'd like to see, the more the better. So that goes for all of them. Volume spike in the fib zone, and then we'll get the setup going, saying, we'll be able to say smart money is now entering again short. Fresh positions expecting, a leg down from this point. We draw a fib here. some of these levels start to come together. Sign of weakness off of this 618 daily pivot business. So we'll see. Hopefully we get that. Of course, everything's correlating. Again, that's the story. So it's all the same friggin' setup everywhere. It's ridiculous. I guess you see it all if you trade long enough. There's times where there's just no correlation. Everything's just off in its own world, or, maybe a couple of pairs correlating, but not much. Of course, this is the stuff in reverse because it's dollar-driven, but also yen. That's what's interesting about it. With the yen driving the yen pairs in the same way the dollar drove the dollar pairs to make these moves correlated, you'd have to say that whatever went on with the dollar was also going on with the yen. It was sort of in sync. I guess Japan's on our side there. Our fate will be the same. It's one of the few democracies that are actually allies with the U.S. at this point. The list grows thin. Okay. All right, good. Let's get our bounce. Let's get our trade. Let's catch another leg down for 400 pips. And live in whatever way you please. Die in whatever way you see fit. It's not a good time to quote Lord of the Rings. Okay. One does not simply sell. Well, it's like you've seen one chart, you've seen them all. You only have to watch one chart to know what's going on in the whole market. How about that? I'll watch EU and tell you what pound yen is doing. It's the same. At this exact point in time, it's funny because I could tell you about all these pairs all at once. All the stuff I'm going to tell you applies. They're all... Okay, some of those buyers that stepped in are pausing their buy activity. And if the sellers are really serious, and they're not messing around, even going to give this little retracement and they're just ready to jump in, they'll do it now. And the buyers, crazy as they are, know this. So they'll pause and see. So we'll see who has the upper hand right now. Well, as we wait for a setup, at least I'll call the market like a game. Give me something to do. Buyers, sellers, who's taking it right now? Looks like buyers, sort of. See, if the sellers take it here, you end up on a lot of these, if not all of them, with a no demand because of that pause, and then the sellers stepping in from this point. If it breaks the low of that candle, you see the logic behind all that. But selling into the low of the trend, many of which have shown strength, I would not do. Right? I think everybody knows that. Particularly this case. You know, you have a no demand. We kind of got the sense of what's happening here. If it breaks the low of that candle, it's sellers taking it off the lack of buying at the test here. But you used to be selling right in an area that happened to be the one point in the day that had the most buying so far. In this extreme case here. So you know the riskiness of going short here. I will tell you this, though, about trying to get in short. I don't know if telling you about these entries is like just tempting you to do things you shouldn't, or you want to know about the aggressive entries. But it's information, you know, you're responsible for what you do. Okay, so, for example, if we're coming down here now, what if these buyers don't show up? You see already that they didn't really follow through. There was a no demand, and bam, the sellers jump on it again, right? Now, what if it comes down here? This is more of a lesson than trying to get in, but who knows? If it comes down to this point, and let's say, for a really extreme example to prove my point, where the buyers were active before, we suddenly get low volume, and it kind of just sits there in low volume. And then it starts to move down, and volume is just not picking up. What does that tell you about buyers? They're just not present. It's most likely going for another leg down. But more buyers could be lurking anywhere. That's the thing. It could be all good, and then suddenly you're at hole number 128, and buyers come in again, and you get a retracement. That's the danger of going short so late. So on the other hand, these higher prices bring in weakness, and if, let's say, you saw a sign of weakness here at the earliest, the higher the better, and you got in, let's say at 13 of no demand, you have plenty of room. Well, these are big moves, so it's lots of room as far as, even if it just double bottoms and doesn't really continue down for a target. Now, in these moves, they're bigger than they appear, pip-wise. So any entry, is more likely to have larger stops. Larger targets are reasonable, but larger stops, which doesn't mean a bigger loss. It just means take a smaller position, so it's not over risking. So I never get like one loss that really just does major damage compared to others or anything like that. You never want that to happen. A loss is a loss. Shouldn't be a big deal compared to other ones. So occasionally in these kind of environments, you might need a bigger stop just to put it where it needs to be for the setup. And if it's 50 pips, then okay, your half position is almost your full risk, whatever, however you want to put it. So the euro is seeing more aggressive selling here. Right off the 14 EMA. Buyers really wimped out really quickly, right? And the sellers said, okay, we'll keep selling. But that's exactly what happened there. With the pound, though, pound itself is seeing, because this is against the dollar, and seeing a little more buying on the pound itself. So that may bring it up to the better entry area. But remember what I said about EJ and EU, about these lower prices. If the volume just doesn't show up, it's likely to try to go lower. We don't know where that demand may be, but it's going to try. If it's down here on low volume, it's going to try. Yeah, we'll know it when we see it. Yeah, these moves, I know I was just talking about it, but really, these moves are much bigger than they appear. It's like double what you would think by looking at the chart. This is over 20 pips. Just this box right here is over 20 pips. Normally that would be what, 7 pips or something, right? 10 pips the most, typically, the way that chart looks on a 5-minute. That's 24 pips. That wick. Wow, big moves. You look at it like that, there. All big and scary. So yeah, based on the patterns and the way the stop loss is usually placed, it's going to be bigger if there's a setup here. And so will the targets. Well, volatility is good, right? It's better than things being too quiet and not moving. We want things to move. But not an hour before London Open and not on news. Jeez. FOMC. Pain in my ass. Okay, good. GU very close. That 48.50, which is already 50, whole number basically, is also 50 fib on GU. And what was that marked? I guess it was a previous support resistance, just a level that's acting as support resistance anyway. So that's all that. So sign of weakness there would be the first reasonable, like, yeah, I'd look to get in. This better not do what it did before, man. It looks like it might happen. It's just going to go. Was that yesterday? It's like seared in my memory. I think it was the day before. Yeah, there it is. It's still there. Oh, God. I was looking to sell right there. And it just did that instead. It's still marked. That's funny. And now we go to now. You better get there. It's easy to look back in hindsight and say, well, why don't we just sell now, right? It worked before. But it's all about probability. If there's a sign of weakness in here before you expect the down move, it's a much higher probability of actually moving down than thinking that it's going to happen right now. Just that one thing, it really increases the probability before looking to get in. That's really the point. As far as that euro situation, euro dollar, euro yen, and this whole if buyers don't show up, it's going to continue down thing. It looks like they're positive sell activity. They're testing for buyers, and buyers are very weak. Right? So, yeah, sellers are probably going to go for another leg down. What do you say? Try to scalp it? Quarter position? You think, oh, we can put a little stop loss, right? Put it right there. It's a little scalp. No, that's a huge stop loss today. If you get in here at 30, trying to chase a breakout off of no demand here, and it's probably going to try another leg down, there's a 50-pip stop right there to sell there. Crazy times. All right. If that EJ looks really good, I might take it. I would consider it a 10 on the aggressive scale. Pound yen just barely made it to 50 fib. Usually if it's that close, you can kind of say it tested because you have spread and the broker, different prices. It pretty much made it there, but the weakness is just not there either way. So if we could really pop in there and see a volume spike and a rejection properly, be better. Yeah, I'm really getting the impression. I know you think I'm probably crazy for talking about this, but again, it's very aggressive. I'd probably take it on a small risk. It's almost like, I made a little this week only on one trade. I could end up either break even or maybe catch something on here if I don't risk a lot. Don't try this at home. See what happens. I just know from looking at these things for so long what it's going to look like if the break to the downside is going to be a real break and continue, which is basically, I'll tell you in advance, it's going to be able to sit down here testing for buyers, and it's just going to get quiet for a second. Not jumpiness. We don't want jumpy. We want lack of jump. So the lower prices are just not attracting buyers, and you start to see that activity where they're cautiously pushing it down and waiting, and those buyers just don't show up at all. You may have a second, one candle in here that's really low volume, leading to another candle, breaking through or whatever off low volume. That candle that breaks through closes at or near the low, right? Think of it as a push through. And the volume's not high. We're talking about probabilities. At that point, it's a probability that it's going to continue down. It's not a traditional setup. Again, it's very aggressive. But it's kind of just talking about what's likely to happen. It's something. Why jumping is no good? Because that would be a sign of strength. That's how smart money accumulates and buys in blocks as others are selling, and it tends to create more jumpiness in price and the increase in activity that we see. And that would be more taken as a sign of strength that the lower prices are attracting buyers. If they're not attracting buyers, they'll tend to sit there at the lower price and then kind of float on down easily without a lot of activity, Kind of makes sense, right? And like, for example, if you look at this candle and we see that lower prices attracted higher volume, the opposite, right? And you look at the size of the candle here, it's not that big. So if the activity was so high on a regular sized candle, that means that the price was jumping a lot. So there's an example of the opposite. Because there's so much activity, it didn't really go anywhere, so it must have been doing that for a little bit, jumping. As sellers kept hitting buyers, and then we get a little bounce or whatever. So that's the opposite of what we want, if we expect it to continue. Yeah. All right. Well, at least we're making best of the times. I think this, at least analyzing, kind of micro-analyzing at this point is at least give you something you can learn. And it all comes down to being able to read the chart. And once you know, you know. Buyers look pretty wimpy. I wouldn't be surprised now. It's kind of for fun, making predictions. Sellers will be jumping in. They're going to jump in here. Or maybe it's a couple of ticks higher, and we'll start seeing some selling again. Think of it like this, just to mess with your head a little bit more. We're not looking to go long, but that's a sign of strength, right? There's automatic rally. I think in a situation where, because it's not a proper bullish background, you're not looking to go long. So what would happen here to kill this potential long entry? A failed push, maybe? On higher volume? See, I'm just using what we know to kind of predict. It's like a long setup failure, sort of, if you look at it like that. I call it a failed push or a failed markup. And that could kind of happen like here, maybe. I'm just kind of having fun with it. Just trying to predict. Like that, with the spike in volume there. And then, as I say, on the way down, when it finally runs into that support again, lower volume, right? No buyers, and then it goes. I'm just sort of playing psychic crystal ball predictions for fun. All right, GU. Thank God. Okay, it's going to be wider spread. That's good. That's fine. Let's see if it rejects. Do we have news? It was, forgot to keep an eye on that. We're past the high impact news for the Swiss. There's no news while we're in session, but there's just plenty of stuff later, and this Euro Economic Summit crap. But, well, there's technically no high impact news till New York. Okay, so we can find out now with the pound, right? Pound yen, pound dollar at this fib area. So ideally to start the short setup here in one of these, or both. These higher prices get rejected. I'm not seeing that yet. Doesn't seem to be happening. No, see, it's not really hitting sellers in our predetermined area to look for the short setup to start. We don't see it yet. Volume is not very high. No pin on top, so technically not a sign of weakness. That's unfortunate. Maybe it'll try to go higher and hit it there. Jeez, I don't know. Give me a setup. Yeah, nothing special happened there. But still, if sellers are pretty aggressive and confident on the EU EJ, they'll probably kick it up right here. But yeah, come on, we want those sellers on the pound. Yeah, it's really too bad we're not seeing the sellers coming in on the pound. So, but of course, it could set up higher. This was just the first closest opportunity. If it doesn't happen here, we had this originally. You could test up here and give a short, or even, draw another the other fib there. It's kind of weird, but okay. 50 to 618. That's 50 fib. Wow. Yeah. Seriously. That could still be a setup right there. Shorting there. That was just the first early one. I don't know about this one. Maybe, though. I'll draw it in there. But it's also a daily pivot either way. In there. Eurodollar has that area. All this stuff. You could draw in. That kind of lines up again there. Daily pivot. All that up there. The higher the better. So that high zone, starting from where that large candle closed, would be a perfectly fine place to look to short. But just to mark up that too. So these are kind of the areas. The higher the better, but they'd all be valid. Seeing weakness come in there for the short. So that's if they just start running up here and don't give any entry. Very basic question, but I still get confused. How can you tell the volume is due to sell or buy power? Well, we're talking about the very basics of VSA here. From result of candle size and color, or everything from context. Well, there's a few principles involved. There's sort of a lengthy explanation, but to give you the short version, if lower prices are rejected on high volume, that's buyers coming in against selling. And we're talking about professional buyers' activity and how they operate. So if lower prices are rejected on high volume, those are buyers coming in, pre-positioning. I mean, there's a whole thing to explain about all of it. And the same in reverse. If the price is moving up and it's stopped on high volume, that's because the activity that's increasing is selling. That's one of the main foundational things. So you could, yeah, go ahead. Nice and simple answer? Okay, good, yeah. Cool. Yeah, it's pretty logical because, like an example I give is if something goes on sale, let's say you lower the price, it's going to tend to attract more activity, attract more buyers. If you put something on sale and it's not attracting more buyers, what's going to happen with the activity? It's not really going to increase. AU has also had its fib area, so we'll see what happens here. Yeah, you see GU is more likely to continue up. That's not going to be a surprise if that happens. And pound yen. These guys, what are these guys doing? Okay, looks like sellers are being really patient. There's not much buying. There's some small amount of buying. So the sellers are just kind of hanging out, not doing much there. And that seems to be, again, the case kind of everywhere. And with the pound, there's more buying than the euro. But again, we're just not seeing sellers coming in saying, okay, it's time to, right, redistribution phase here and sell into the up move and position for another leg down. It's not saying they're doing that yet. But as long as it's going up, the opportunities are there, particularly at confluence levels with technical analysis, to see the weakness properly come in and look for that entry, right? So that's exactly the story with everything. AU, it could happen at 618. Again, we have those larger areas that it could happen. And you'll know it when you see it. AJ. But we're just not seeing it yet, right? Factual information. Sellers are not too excited to be selling at this price. It's not high enough for them. They expect that there's enough buying to give them a better, higher price, particularly with the pound and the Australian dollar. Euro, not so much buying, so maybe it'll just kind of sit here. So that's the story. Wait and see. I'll check back in a few minutes. All right. Nothing's really changed, right? No. It's quiet time, right? This is when the market gets quiet. What a terrible phase as far as timing the market is in right now. Timing. The moves are nice. But pre-London, FOMC, and then the main active hours, we run into quiet stuff a lot. Come on. Normally, again, if you've been trading a long time, you know if you're. Where's London open on here? Here. So normally the volume would pick up around this point in the day, and London open, not there. And it would just start to work its way up as things warmed up. That's the usual case. It would be doing that. So that's the weirdness right now. That's part of it. This is more like how the Dow behaves. And sometimes the Dow gets that big spike at the open. And then like retraces slowly. And goes to sleep. Yep. So we'll see if we don't get opportunities now. It still could come up again, with these higher prices giving the weakness in the short entry at these, ideally, these predetermined areas we have. Although we could at least have fun looking at the trying to predict if this is going to break or double bottom as it tests here, but we can't even do that now. It's sleepy time, right? Pain in the ass. Let's think maybe I'll have fun and put a tiny position short here if it's behaving perfectly. But it's just nothing. It kind of tested for buyers. The buyers didn't show up, but the sellers were just kind of sitting around. And that's just the theme altogether here, that the sellers are not jumping on things right now. Okay. So it's not that good setups are not possible soon. It's just not happening. So I'll just be in and out. We'll keep checking on things. Okay, guys, really quiet. Oh, there goes the pound. Okay, let's see what happens here. Very close to this area. 50 fib on the pound dollar. Let's go. Let's see some sellers come in. Okay, we're seeing a little. I already know. I can feel it. No, I'm just kidding. 1 minute chart? I bet you. Not so much. Little increase here. But obviously we'd like to see it a little higher and just get in there and give us a good volume spike. Let's go. Been kind of slow with the timing of the setups, trying to get setups last couple of weeks. Things are not moving. There's nothing you can do. Things are moving at weird times. We're on high FOMC. What can you do? It always comes back. Come on, almost there. Interesting, this is really focused on the pound. This movement right now. The other pairs are not moving. There's no high impact news for the pound. There's a 10-year bond auction. Light impact news tentative, so we don't have a time on that. But that's a light impact anyway. But the thing's, it's alive. Let's go. It's alive. So, very simply put, if we can get just a little higher, we're going to get to an area on these two pairs where sellers should increase their activity if they're looking to continue to get in short and give us short opportunities and to get in with them. So the increase in activity, the rejection of price that suddenly could appear in these predetermined areas will communicate that to us. Start off looking for the entry. So on the other hand, if it moves up there and we don't see that activity like here, that was the first possible area, right? And they didn't show up. We knew right away. I knew at this point, right? This is when we were saying, no, it's more likely to continue up. Same with the pound here. Widespread, but the volume's not high, and it closed at the high. So there's nothing about that says weakness. And mainly their lack of the high volume. For a wide candle to not have high volume tells you there's a lack of selling. It went up very easily. It took little effort to gain all that ground due to the lack of sell activity. Make sense? Makes sense. Okay. So, sellers come in, we'll know when we see them. And we'll be getting in the downtrend with weakness in the background and all that. Maybe, because it's been a little while, a few weeks since we've caught a 70, 100 pip move or something big. So, but obviously that gives you the best opportunity getting, with the trend. And with some fresh sell entries that we see. Large candle with medium volume equals no seller. Large. Remember we were saying higher prices may attract sellers. We were talking about, right? If it's high volume rejection, right? First, remember that. So price. Yes. Talking about higher volume, rejecting at a high price, saying sellers are coming in, right? Remember that first thing I explained? That's my first question to you. Okay. Now imagine the opposite, where price is moving up and selling did not come in. That would likely not have an increase in volume, and the candle would be able to likely close near the high. So that's sort of the opposite deal. So the buyers were able to push price up far with medium volume because the seller was so inactive. So it's the opposite. Make sense? When you apply the principles, you always get an answer. Well, to me, that candle looks fairly large. Yeah, it's fairly large. And the fact that the volume is not high says it wasn't necessarily a large amount of buying that made it go. Obviously, there was some buying, but it's not that the buying was excessively large. It was that there was such lack of selling as well. Because when a buy order is coming in, right, there has to be the other side of that trade, a seller. And if the sellers are not there, they'll be at higher prices. Okay, good. Well, that's nice. That's like the highest in, 20 or so candles. It's about, 1 pip from 50 fib. That's a good sign. Normally when these set up, not normally, or sometimes when you get these setups off these fib areas, that volume start to increase as you get close to it. I don't know, they can't wait. But that's a good sign so far. But again, we want to just pop in there. If we do it quickly, it's just a pop in there, a high volume rejection, and then we look to get in. But we can hang around higher prices as long as they're attracting sellers, and we'll be starting the setup. A little higher on these two. Come on. Just a little higher. What is it? I thought you were blind. I can see a lot better now. It's just a little higher. I have a bad feeling about this. GU, small candle with high volume selling coming in. Yes, sir. Exactly. And what we're talking about with these high volume points and why we hone in on them so much is because there's large activity from smart money. It's for the most part, they're pre-positioning for an expected move on these high volume points. So even in this downtrend, again, you see like at this point in the day, the largest buying came in. And it really pretty much became a support. We had a fake break pattern, which is typical. And from there, that established that there was more buying than selling there. So yeah, it's pre-positioning is really what we're honing in on. And usually the result of that is going to be predictable. If you're going with the trend and you're seeing selling coming in, they are expecting very soon that the buying is also going to dry up, and that's part of what's needed for the entry, though. I need a cough drop or something. Smart money comes in as pending order or market order. Probably both. It's timed. It comes in blocks. I think more than one thing I can tell you. I once heard the term auto match, and I said, I don't know if that was the official term or something that this guy made up, but he was one of the first people to actually talk about VSA in like FOREX forums. Doctor or something rather. But he used the term auto match, and basically talking about when you get to these points that we're talking about, like right here, you see you get dojis. You get to the point where they're only selling when buying comes in. They're not trying to actually mark down a price. So you end up with that sort of action there. You get what I'm saying? So they're selling as buying is coming in to match it. Because if they don't, then they're going to sell and push it down. And they're trying to sell at a high price. They're trying to absorb the buying before they mark it down. So what's interesting about that is, to an extent, the amount of buying can dictate how much they are able to sell at that price based on how much buying is at that price. They're kind of matching it, you see? Now, with all this tick activity, it's not going red. It's just, it's like it comes back to the open. They're not trying to push it down. So it's like auto matching. And it seems so quick, you see? So they match the buying with selling just to kind of push it back to where it started. As I'm explaining this, it's actually happening. Now let's see if they match that. There. They're matching it. And it's just toeing around here. It's just bouncing in here. So if we keep seeing that, then we're starting to set up. Indecision? I wouldn't use the word indecision. It's pre-positioning. What would be indecision? Maybe I'm missing it. Or is that a decision point? Right, it's a decision point. We can find out. But as far as how they're entering, there is some sort of matching going on. Again, here, all this activity. This is probably going to be a nice high volume candle. We can see the activity picked up. But it's all happening in this area, going up and matching going down, up and down. And then again, if we're going to continue that activity, we may see, again, aggressive selling here right now in the zones, particularly. So again, we should see higher prices attracting sellers. Again, it's a perfect example of the opposite, where it didn't happen here, and that's why it continued up. So this is really, really, really how to read a chart, right? This is the real deal. Sometimes the information is good, sometimes it's not. Like it or not, you're getting facts. All right, let's see what happens higher prices. So yeah, this is really reading the market, right? People talk about price action. Once you master this, price action. Playing with toys. You can get, again, if you're just looking at price action, let's say you're looking to sell here because you've done your technical analysis and everything that we're saying, like the downtrend, you want to get in short, right? Let's say you get a big pin bar. All right, now I'm turning into an asshole. I'll be nice about it. But you get a big pin bar, right? And let's say for us, the volume's not high on that pin bar. We don't care that it's a pin bar. It's more likely to go up. Like, what if that was a large pin, right? But we had that volume. It wasn't high. That's no entry. That's no signal that it's going to turn. So if you're just trading off a pin bar, you're getting half the story. If the volume's not high, it really doesn't mean anything. It means that there was some buying and some selling. But as far as large positioning to the short side, no. Obviously not. So yeah, all that price action stuff is only half. You're still half blind with that. But you guys know that. That's why you're here. Good stuff. Good stuff. See? Look at that. That's what we want. See the volume. See the rejection in our predetermined area. Perfect. Pound yen. GU not bad too, the volume. And what's up with these guys? All right, they're moving up. That's better than moving down and have to try to chase it. So good. That's what we want. It's possible that, with everything correlating the way it is, to some extent, they're all correlating all the time here. The ideal situation is like they all set up for a short. It could really happen. This could happen here. This could happen here. They're all at or close to areas. And the volume's picking up. But the pound, okay, good here. AU. Sometimes you see that little overshoot of 618, but as long as it comes back soon, I don't mind that it went slightly above. So that could be a sign of weakness there if that becomes a top. Not bad. So after you confirm a big pin with high volume for a pound yen, what are you looking for to take position? Well, that's the whole method that you have to see in action to learn, yeah. But in short, it's no demand, something called automatic support, automatic rally. And there's continued analysis that goes on with information that comes in, and the entries start showing up, ranging from aggressive to more conservative. So it's just a process you'll have to see, yeah. But yeah, the pound in particular showed that really good behavior and the pound yen, really, but both, of selling into the up move here. Okay. So higher prices coming in, same deal. So it's not that these have to be at top, what we just saw, but as long as higher prices continue to attract sellers, and it doesn't go completely past our zones of opportunity, then we're fine. I mean, this could go up a slight overshoot of 618, right? That's as high as it could go. But continue to see large selling, no problem, and we're looking for entry. But once that disappears, then the setup starts to not form properly, so we need to see that at higher prices. They seem pretty confident on the pound. They'll probably keep selling into it, right? But they're in the mode now. They're selling into the buying. What would make them bail out would be, well, it's just too much buying, and then it starts running up, and they're just bailing out. But that's less often the case. But of course, we'll find out. And you saw what just happened there. It was like bam, bam, it ran up and then back down. It can't sit at the high because it keeps hitting the sellers. It's good action. It's a good example. Think of all the sell orders. Who's doing what, right? Smart money selling. All the sell orders that they were now able to get in here in such large amounts. All that action going on in these candles, right? Also think about if those smart money sellers were not entering short, what would it look like? Big green candles that would do that, right? Yes. So this is known as redistribution during a downtrend when this goes on a retracement. Basically re-entering or adding to short positions from entities that are large enough to call smart money and show up on the chart creating this activity and working in this way. And a consensus among them to do this. And it goes from redistribution to markdown again, if everything works out. But when they're looking to do that is when the buying dries up. So they're not going to try to fight these buyers. They're trying to take advantage of the good prices and the fact that they must believe that the buying is going to dry up soon, and that's why they're doing this now. So from their point of view, the ideal time to switch from selling into up moves that we're seeing now into actually marking down price intentionally would be when there's no more buyers. Hence the no demand. The low volume test leading to entry. That's right at daily pivot too on GU. Daily pivot 618. We would expect, right? The more things start piling up, the more you would expect that if the sellers are going to do their business, they're going to do it there. If they don't do it there, it's very telling, right? So it looks like they are. Yeah, that seems to be the one that they're most confidently positioning short, and they have this plan to mark it down that we're starting to see is with the pound. A conniving little plan. See how they just will not sell unless price moves up? That's hardcore redistribution. Like, is this candle ever going to turn red? Oh, there it goes, finally. Think of all the downticks that occurred in there without a red candle actually forming. It's pretty funny. It was like 5 minutes worth almost of, or maybe more, of jumpy price action without ever seeing it turn red. So that's how much they're simply just buying when they're just selling when others buy, and they wait. Nobody talks about this stuff. Should be common knowledge, right? I had to be like detective and figure all this stuff out. Okay. So they're clearly in redistribution mode, selling top moves. And we're just going to watch it. Wait for things to shape up properly. Okay. This drew in because you want to see, the higher volume was there. It's a slight overshoot of 618, which is really the most I'll allow. If it continues up, then it's just, maybe it'll go there. And the volume increase, we want a result of a bearish reaction as a result. So that's shaping up just fine. Just back out and look at these, remember where we are. Okay, it's just a small fib retracement. So it's fairly aggressive entry, not waiting for really higher prices to come in. Nothing up here we'd be waiting for. It's a small pullback we're talking about. So that's selling. It should be some strong stuff. Should be a good setup. Otherwise, it could go higher. Yeah, some decent volume here where it needed to be. So, from this point, what goes on now? If the buyers are finally starting to dry up a little bit, then the sellers will start just gently bringing this down. Just gently. And the idea is to remember the principle: lower prices may attract buyers. So as they're bringing it down, they'll say, any buyers, any buyers, any buyers, and they may run into some, and they'll stop. And they'll let it come up, and they'll see what they're doing, how many there are. They may bring it up there, and it'll double top, and they'll sell again, right? Let's find out. And typically, that's going to happen at the 14 EMA. The low volume test. Or maybe be a high volume test. Show a sign of strength, and that'll say to the sellers, well, there's still a lot of buying. What are you going to do about it? You can maybe sell up here. Maybe let them bring it up another leg, right? So you get all this information. Let's find out. So, ever so gently I'm funny today. They're going to bring this down because the buying has chilled out a bit. So it's really their move. Is there a case you take long as scalp if you identify test candle fails? You mean like in a bearish environment when I'm looking to sell? Is there a time where I would take a long? I don't really do that anymore. Nah. Like, for example, here it was more predictable that it was going to continue up from this point, as we were saying in real time. Okay, we don't see the selling; it's likely to continue up. I used to take 20 trades a day back in like 2008. So you can kind of see why I was that confident to start doing that, and I didn't know nearly as much as I know now, but. I was like, damn, I could just always be in a trade because there's always a probability. I can always tell where it's probably going at any point. But then I started narrowing it down to what's the most probable, what's the highest probability, because then I would just be swinging around all day, positive, negative, positive, negative. And I was like, okay, I got to start narrowing it down to, like, what's the highest probability? And in the 2 or 3 hours now that I trade, if I get one good high probability trade a day, on average, 2, none, 3, whatever happens that day, then that's what I'm looking for. But, you're learning this information, use it however you want to use it. The point I want people to know eventually, because at first you maybe want to just be robotic and try to do the proper setup, but eventually get to the point where you're able to read a chart so well that I wouldn't expect that everybody would be taking the same trades all the time. Some more aggressive, some more conservative, You can use this information to get 10 trades a day. But what's your win ratio going to be? It's not going to be 80, 90%, It might be 60. You might have some bad runs. I don't know. And risk reward too is a big part of the setup too. Getting in areas like this and having a stop loss here, which is where it would be. Like that selling here is better than selling here, because if we had to stop just slightly above that, the price could still go there and still set up for a short, and you just got stopped out. So there's all kinds of things involved to say, okay, this is the better trade or the worst trade. Good stop loss placement. So we're seeing what I kind of expected here. Everything's correlating. Is that the sellers are just going to slowly bring it down a little bit. And if they're going to play the game properly here, they're going to just take their time with it and go. Once they get to the nearest point, which is the 14 EMA, there's nothing else really there. And they're almost there anyway, that they're going to pause their sell activity and we'll test for buyers there. This is already at the 14 EMA. These guys are very close. Should be soon, the test. Maybe they show up, maybe they don't. I have a feeling a lot of buyers are committed at this point, and there won't be many. Okay. A little aggressive push there. A little confident selling. A little urgency. See what happens here. It's kind of odd to do that at that point, but okay. 14 EMA. So as far as the first potential clean entry, it would be a no demand now. Test for buyers and they don't show up. And then sellers take and continue down entry. So we'll see what buyers do. This is the test. Yeah, enough of them are at the 14 EMA, at least 3 of them. 4 of them? 3 of them at the 14 EMA. Yeah, AJ. So we'll see what's up with buyers here. Maybe it's just kind of a quick pause and it just goes. Hopefully they won't be that aggressive. We'll try to get a no demand entry, a regular entry. But either way, we'll get a read on things here on the test. I don't see many buyers. Where are they? It's like it's pausing, they're not showing up, and they're just pushing it down a little bit. Buyers? So again, like I've been saying, all this stuff is much bigger than it appears. So again here, like regular pattern, right? There's an entry off of 14 EMA, right? That would be like, let's say, 78. Look at the stop. It's like 70 pips instead of 30. So yeah, I have to go a small position. That's all. But of course, this is like a main target, you know, and that's like 80 pips. So the targets are bigger too. So, you know, smaller position, but it's the same deal. How do you distinguish no buyer and just a pause? Well, they're pausing for buyers, and if buyers show up, it'll start moving up. If they don't show up, then it won't. It'll just kind of sit there, kind of droop like it's doing. Maybe go green a little bit, but not follow through, you know. They're just not showing up. So that seems to be the case. I really don't want to miss my opportunity here. I mean, technically, the pound yen did have a no demand. That's a little earlier than I usually would look for them. It's more of here, right? But as far as like, am I breaking a rule? No, there's a no demand there. If this ends up being a lack of buying here, you know, it's not so crazy. It would be a no demand, and then seeing at the 14 EMA, there's no bounce, there's no buyers. So if that ends up being the case, I may be going with that. And the pound yen, is a very big mover. Again, the stop is big. I mean, these are probably going to correlate. I can go with either pair. That's the same candle. It's just a slightly different close. I can put a small position on both. Really small. See, it's going so fast now. It's technically not a no demand, but it's all behaving well. There's no bounce. There's no increase in volume and buyers. This has a slight increase. Okay, but not very many buyers coming in. Not much of a bounce, but obviously the volume's too high to call that a no demand. But it's testing here, and there's really no bounce. This guy's going to run off on me. Come on. Man. Trying to stick to the rules. Typically, things don't go this fast as a no demand. It's been like this condition lately that's just sort of a pain in the ass with things. But how often do we see like the weakness come in and all this stuff goes on and it just goes in a straight line? There's not a no demand. There's not an automatic support and a push through. 9 times out of 10 there is. So it's like that's why I'm not rushing it. Maybe a no demand here. Come on, they're going in a straight line. See, I used to trade like that. Again, when I was more aggressive, I didn't know what I was doing yet. Sign of weakness, 618, downtrend, we're doing this. All right, I'm jumping in. Then it would test for buyers. Buyers would show up, and I'd friggin' get run over. I started learning not to do it so soon. It's nice to see selling, but if you don't wait for lack of buying, it's more risky, right? And that's not really right. I mean, traditional VSA, you're looking for this no demand stuff. It's not like I made it up. Can't take credit for that. All right. Well, if you want me to continue like narrating the details here, if you like it, let me know. It's probably good, right? I'm thinking, I know some of you are very hungry to learn, asking questions, so. But at this point, I was going to say, as we're seeing finally some actual buying show up, that finally the selling should stop, like really, really stop. Because it was still like, they kind of seemed like they're in a rush. And some of these just are going. But now that there's actually a little bounce forming, it looks like hopefully they'll finally actually stop their selling and let it come up. So we could end up with a double top. We could end up with a no demand. So that's hopefully going to be the case here. But just to point out, again, this technically was a no demand. So you had weakness in the predetermined area. Little pop through fake break. That's always nice. The pins, the volume. And then technically there's a no demand. It's just really early, really high up. So moving below that would be entry. Can't really say it's wrong, but it's just very aggressive. We know there's probably going to be another test off the 14, right? Why not wait? It's just very aggressive. And you see, that's why we wait for the test. There you go. Good old 14 EMA. It's a 14 EMA hack. It seems like this is not going to be able to be a no demand because the volume is going to be too high. But really, at this point, a no demand would be valid. We just didn't get it here. We didn't get it here. It just didn't really show up. Maybe a low volume test to give you a slightly higher entry would be better. I'm not looking to chase it, so maybe a low volume test or even a double top. But technically, just a no demand here would be valid. Quite a big stop. Again, so big. It doesn't look like it. This one's not as bad. AU is not quite as bad. What's that? Smart Money gives a 14 EMA as Christmas gift to their kids. You're sleepy. You're delirious. Ooh, no demand GU. All right, good. Technically, it's a no demand. All 14 EMA. It's not the lowest volume in the world, but I'll take it. So the logic of the no demand entry is that the sellers are on lower volume. They don't follow through, and sellers, the buyers, and then the sellers start pushing it again, and we get in. Maybe a little low volume test on AU. HA. But as far as automatic rally, that's starting to form. I mean, automatic support. Automatic support. It's that, really. See, this is why we wait, because it can often double top, do this testing game. Automatic support. That could give us a push-through entry later when it comes back. So there's our automatic support test for buyers at 14 EMA and, well, most of them at 14 EMA. And the buyers are finally showing up. It was their move, and they have shown up. So what's the next thing that we're looking for? Sellers to come in again. Maybe they won't. If they don't, it's probably going to go another leg up. If they do, they're ideally looking for this double top fake break stuff. Basically selling in large amounts in the same area that they've already done it and trying to cap this off at this point. That would be the best thing we could see. So remember all that stuff? Tick, tick, tick. Yeah, it should happen again now. Same price area. Tick, tick, tick. Only when it moves up, then it moves down. If that's the case, then we're still good. In fact, better, because they're committing even more, right? So you see how they matched it? See how long price is sitting at the open of the candle? They just matched it back to the price that it opened. They're not looking to push it down. It's really obvious today. It's very clean what they're doing. Look at that. You saw a green flash there because that's when they sell. Very obvious here. And they don't want to push it down past the open. I would assume it's mainly computers doing this, right? Software is doing this at this point. Oh, good. Hey, you. Not a bad decision to not chase it, right? There you go. Everybody's testing for buyers. They got a little buyers. All right. Looks like that was off fib on AJ. Yeah. Ideally, this volume would be higher up here, now that we're in the high price area and sort of the pin area. But looking at the price action of it, it was very clearly still distribution activity. So I'm not really worried about it yet. But if it continues up and we're not seeing the selling, the higher volume, then that's not good. But that was very clear that they still were just matching buy orders with selling. If there wasn't a lot of buying, then there didn't have to be a lot of selling. You know what I'm saying? They just did what they had to do to kind of do this doji stuff. Well, either we have them all figured out or I'm completely delusional and just telling you delusional stories about the market. I don't know. It could be that. No demand? Technically, that previous candle is a no demand on both of these. But this is really too high. I mean, particularly when you get in that pin area. We know that the higher volume is really better to see there. No demand test for buyers. Again, really a bit lower is proper for me. But as we know, this selling has really positioned pretty large. So let's see what happens. How exciting. There's always that possibility that they'll just bail out. There's just too much buying and they don't want to fight it. And what that would look like would be a breakout to the upside without any weakness coming in. Like candle that is wide, closes at its high, and it's not high volume. Like that. So if you see this kind of thing, right, pushing through here, again, the volume's not high and there's no pin. And that happens here and that happens here. That's bailing out. That's getting out of the short positions. That's what it has to look like. It's going to look like that if that's what they do. No way around it. Of course, it's more rare, but You see it? So as far as a potential setup, of course, no demand as it comes down. Simple no demand could be an entry. But what's going to be key now is that since this is, I mean, it was already obvious because it was a 14 EMA and stuff, but now that it's been clearly established as the test area, pound dollar saw some buyers there for sure, right? That coming back to that point is very crucial to see. You know, if the buying is not there, then it's likely to go. It may be there again. It could get stuck in range, you know, and all that. So a no demand or basically seeing low volume and getting through would be a sort of a later, more conservative entry here than just, you know, getting in kind of up here or whatever. So there's different options. Technically, again, a no demand on AU. That would have to come down to confirm below it, right? 14 EMA. Well, I get the sense that I'm just speculating, I don't know, based on gut, that the sellers that we were seeing on the pound here, and in general, were kind of, I don't know if I want to use the word forced to commit a lot of shorts to really stop the up move, as we saw. And I don't think they're going to do more than they need to create the double top. But double top fake break, it could go as high as the fake break, and that's it. But they'll probably just match it and just do enough selling to bring it to allow it from, just not allow it to go another leg up and double top fake break. That's probably where they're at. So selling into the up moves, but really just as much as they need to. How do I know this? I don't know. I just kind of know. And again, down ticks should really only occur, particularly like in this high area right now, only should occur after an up move, an up tick, and then a down tick. Or a few up ticks, a few down ticks. But a pause should bring an up move to stop a pause, to break the pause, not a down move. Getting into a lot of detail here, but it's good information, right? This is really reading it. I just watched it happen like 10 times in a row on the pound yen. Every time price would stop moving for a couple of seconds, once it started moving again, it was an uptick. And then comes the downtick. This broker's pretty good. The volume's so similar to E-Signal. The feel that you're getting with the prices is good. I mean, if the price ticks were not well representing the market, then the volume wouldn't either. It wouldn't be so similar to E-Signal. That's pretty good. All right, so we've had it looks like, we have a slight increase in volume there. Closed off the high. It's a fake break pattern. And buying was met with selling. We watched it happen. Now it really needs to come down. It really needs to happen. Otherwise, sellers are kind of scared and the buyers are still active and all that, right? Okay. Needs to come down now. Double top fake break. Let's go. Another no demand on AU. That's a reasonable entry here. We have the sign of weakness. Let's look at this. Very close to an entry. Of course, this whole thing ended up being weakness in the background. We're in our downtrend, blah, blah, blah. It's a fairly early entry because it's like a little fib retracement, but it's correct. First main target is bottom. That's like 40 pips. That's fine. Hold on a second. Let me just get ready. I may be entering this. So it's just starting to become valid right now. I'm going to give it a little time to see how it's behaving here, but no demand, price moving below, right? On the test after the weakness came in and all that. So very clean picture here. Stop loss would be about, 13. In case it wants to range around here. Which is not so big compared to some of these others right now. Okay, so I'm considering the entry here on the AU short. Stop would be 77.13. It is valid now. I'm just giving it a moment. I'm not going full position, by the way, in case I see another opportunity. So a little bigger than half position, but not full, in case something else pops up here, which I think probably will. Maybe on a pound pair. Okay, so I'm in the trade. So AU short, I'm in the trade. Stop at 77.13. AU short, I'm in the trade. Got in at 8.9. Okay. So like I said, it's not full risk. In case I get another opportunity, I'll be able to go in. So again, on targets, main target on the trade is really just this, or the first target, I guess you could say. First main target is basically 60 or 50. So whatever that is, 25 pips or so, as a first target. So if all goes very smoothly and normally, I'll take off maybe a third of my position here, depending on how it looks. If there's a lot of strength, I'll close more. If there's not, I'll close less. See how likely it is to continue. But taking some there, putting it in the bank, move my stop to break even. And then from there, we are basically just looking at obvious levels to pick off profit here and there as it goes, and maybe try to hold some for a continuation of the downtrend, or at least a test of support here, which is about 100 pips away, for a final target, just to test the low. It doesn't even need to continue the trend. But there's other areas in there. 7.6. That's 7.650. 7.6. Whole number, support, and all that. You got your pivots here. And wherever strength may start to appear. All right, so that's the deal. So not a high full risk position, but a good potential payoff, and I could see if I can find something else. Okay, these guys coming down. Good. I'll take this. That's behaving okay. Pound dollar, not bad. So maybe the pound dollar. Starting to get the sense that things should now start moving down again, right? Everything's correlating, so we could just... It's funny. So it looks like everybody wants to start coming down again. Okay. Sorry, I should mute the mic when I do that. All right. So it kind of feels like, or you kind of get the sense that the buying has dried up, and it's really the seller's move. They can start marking it down a bit here. There's some other areas where they may want to pause again and test, like this stuff, right? So could get an entry off of that if it becomes no demand. But that's kind of the sense here. Anything could happen. But for price to just kind of run up at this point, seems like the buying is kind of, I guess you could say, exhausted or committed. Kind of feels that way. this top of the hour. It's funny how often I look at the clock and it's 1 or 2 minutes to the top of the hour. So I don't look at it that much. I'm not like a clock person. I'm like, what time is it? How long have I been here? What? It's always like 1 or 2 minutes to the top of the hour every time. So, click. All right, top of the hour. So, normally I would be going now, but I'll hang around a little bit, see if we can manage this trade, and see if there's any additional entries, since we're kind of close to that, possibly. I think the GU, maybe. What would be the one? I'd probably want to avoid AJ since I'm in AU, and they're most likely going to correlate. So if it goes off the track and does some funny business moving up, they may correlate up. So to kind of spread it around. Could be GU, but what I don't like about it was the amount of volume on that. So ideally, really be waiting for that to test again and not see that, and then look for the entry. That would be the next possible sort of conservative entry here. And again, no demand right here, 14 EMA, that could be an entry, but then you have to deal with this level, which in this case is like 20 pips away in its first target. Automatic rally, automatic support target. The stop would be a little big. It certainly wouldn't be 1-to-1. Let's do this AU, no drawdown, no whammies. But it still has to get through automatic support, right? That would have been less aggressive to look for the push through here. But as far as how much it's already moved, I kind of would feel like I'm chasing it. I like to get it sort of in this top area. Not so far away. Bad risk reward. Get in there. It's kind of late. Any other pairs you guys looking at? Anything of interest? If things are correlating so much, it's probably just the same story in reverse or whatever. This is a... Yeah. Same shit, different pair. Yep. Look at that NJ short setting up, right? Look, push through. Dollar CAD, same shit, yeah. Same shit, different pair. This is the most correlated the markets get. I mean, come on. It's crazy. And I have no complaints. I like dollar and yen driven moves. It keeps things clean. The only complaint I have right now is the timing of these moves. You know, again, before London Open and just running off, and then like the FOMC. And there's a lot of time we spend, just things aren't moving. But that'll change. Wouldn't you take NJ? I don't really just jump in and trade pairs that I don't normally look at. Typically what I end up finding is I just hone in on these, and if I'm getting a setup here, there's probably a setup over there on these other pairs. If I'm not getting a setup and things are messy, it's probably not going to give a setup over there. But occasionally I'll take something else. This is not bad, the NJ. Well, actually, now it's becoming a high volume push through, which is not correct. So technically it's not correct right now. But that could clear up with a no demand and all that. But yeah, it's possible. I think I may just have my pick here. as everything's correlating. Try to pick the best one. So UJ should be going up and GU should be going down. GJ, we should say, GJ, yeah, it's probably going to correlate and go down. I don't think it's going to be able to go off in its own world. But what's not looking ideal is the lack of high volume up here. Technically, and if things are correlating, I'd rather just pick the pair that I could take a screenshot and go, there's a setup. It's all correct. Which is the AU is the most correct. They'll probably end up correlating, right? If the pound yen doesn't follow everybody else, there's going to be others that don't follow, whether it's yen pairs or pound pairs. Yeah. That basically sums it up. Okay, that's not a no demand, but again, you see the game, right? 14 EMA is where we got a green candle. The sellers are being very cautious here. They're positioning when they need to, right? Only when they really need to. Otherwise, they're like, let's just wait. That's totally the game. It's completely the conversation going on. Somewhere in a bunker in New Jersey. In Chicago. Actually, they shut down the... did they finally shut down the exchange in Chicago? They did, right? Like, there's no floor anymore, right? Which is crazy. I think so. I'm clicking around so much, maybe I should go back to the multiple monitors. So the floor trader became chart trader. The floor trader became unemployed because he didn't know how to read no chart. Yeah, that's the story. Those guys don't know how to read a chart. It's a different school of trading. I mean, Tom Williams, Wyckoff, they helped translate that stuff to charts, but they had to translate it to charts. Pit stuff is something different altogether, yeah. A lot of these guys were older, you know, they don't use computers much. Yeah, it was inevitable. I'm surprised it lasted this long. It's a novelty. So AU, the trade, is attempting to push through automatic support, and what we want to see is no high volume, no large rejection, right? Lower prices may attract buyers. We want to see that they're not attracting buyers, meaning that we're able to make some progress and we're not really struggling to do that. So medium volume and a solid close would be the ideal. Doesn't mean it has to happen or everything's over, but that would communicate really that the buyers are not showing up on the test here. Again, that's kind of what I'm looking for on GU to make it safe. Maybe, maybe not, but if that comes around, that'll be the best. Maybe sooner or whatever, but that's the deal. Low volume test. Okay, not a lot of activity. That's good. And if sellers are being cautious, pausing their activity here, that obviously that's where an obvious place to do it. So we may just sit here. We may get a no demand. But again, the volume's not high, and that's good. Just think of a sign of strength. That would be high volume. That wouldn't be good. So that's communicating to these sellers. It seems like smooth sailing here. You can go for it. But they tend to, sometimes wait. Sometimes. But it's looking good for them. I just want to see. Symmetry also definitely plays a role in these things. It's nice when it snaps and kind of lines up with analysis that you already have, but now that this has been established, you could also call it a fib extension kind of move. And this applies fractally, of course, on larger time frames. You could do this on a daily chart with the swings and see at some point you have some very clean symmetry, which could help on targets or in areas where, even if that's not a target, where sellers will most likely pause their activity, test for buyers. That stuff does also give a probability there that matters. Of course, we could draw a fib on here too. And see crucial areas being tested. Okay, 50 fib. So now we can say, because that's definitely information, to test 50 fib and not get a sign of strength is good, right? Because that's where sometimes you can run into a problem in strength. But there may be some buying through here, just because it is fib, and sometimes it's hard to get through. But the point is, it's an area of information. And if we get through there, it's most likely to get to our target. It's an area we can see what's going on. If buyers don't show up here, then it's looking really good, right? We could say that. If a spike in volume shows up 618, suddenly a lot of buyers come in. Okay, move stop to break even, deal with it, right? So it's good information. It feels like it's sellers for the taking right now. Come on, sellers. Let's do it now. Go, go, go. Fat finger. We need Fat Finger Joey. That caused the flash crash. Yeah, right. Nobody's touching the euro right now. Again, even though it didn't push through, it touched 50 fib, and again, low volume at fib, low volume at a lower price can only be a good sign if you're short. Come on, sellers, it's all yours. Being such a wimp. Wimps. Again, so no demand at this point would be valid on GU. Pound yen is just not as clean, and so, but that would be a little more aggressive again than looking for, a test here and kind of dealing with that area instead of selling into it. So I don't think I'll do that, but it would be technically valid, but not the greatest. Basically, selling it to an area that just showed demand is not best. If the demand is not shown there, then it's kind of cleaned up the situation. AJ doing that same game there. It's low volume test at automatic support, right? So yeah, it's all looking good. It's just not moving. Basically, I'll take it as the sellers being very cautious. And it's just a little quiet. Euro dollar, euro yen not moving. All right, let's go. Grow some balls. Sellers, you're already in position. Now follow through. It's going to close out the low. All right. There's a proper push through there in AU, right? Doesn't get much better than that. Okay, so the trade's looking good. Not in a rush. If that was a high volume rejection, trying to do that, that would be a problem. It is the opposite. Be nice for sellers just to keep going here. Keep it going. No. They want to be careful today. Of course, that's a common pattern. Automatic support, break test continuation on low volume. If they want to be real cautious and there's a little bit of buying, then you'll see that pattern most likely. So remember the last trade was AU short too, right? Yeah. Cool. AU's back, people. We're back. AU. AJ. They're back. They're normal again. It's been a long time. But yeah, the AU, which ended up running up to somewhere about 50 pips when it did a fake break of the support target area. So it ended up moving well. It just took some time, and it even did right a little later on. It was kind of looking like this, and then it did like some more low volume testing sort of stuff, and like a sign of weakness, and then it went. So things tend to play out sooner or later. If it's going to be slow, it's going to be slow. You just wait. But I'd rather take slow and a good-looking chart than some issue showing up here as far as strength coming in. Just trying to hang around, see if I could maybe get the first target or some sort of managing of the trade with you guys. But, of course, I can always come in the chat and do that. And see if there was any other entries. The euro just went to sleep. There's nothing to do there. And you know what I'm looking for with the pound dollar? No demand, and maybe ideally the no demand here. No demand push. Or a low volume test push, or simply the push. No buyers is the point. Yes, sir. For AU, I understand how you said first target, but would you consider 618 as first target? Yeah, sure. Depending on how it behaves, but it's totally reasonable to take some profit. The earlier it is, like the less I tend to take off, because I'm trying to obviously keep a good risk reward and all that. Try to get to some bigger targets. But, yeah, here we go. We're almost there. But it's still a combination of, these levels and how it's behaving at these levels will be very telling. So I'll give it a second, but it's not unreasonable. Yeah, we'll be up what? It's a little small. I think we'll be up like 13 pips. It's a little small. A little small. So really, I probably will not be touching it since I'm just looking at the pip count now and it's so small. Unless there's a sign of strength, then I'll deal with it. some way or another. Yeah. A little too small. If it was 17, 20, 20 pips, yeah. Plus, there's a bigger stop here. I didn't go overboard in risk, but the stop is bigger. So technically, we should have bigger targets. Technically, I don't obsess about risk reward though. I think people that say you must have a 2-to-1, 3-to-1, 4, risk reward. You know those people? No, you have to have at least 2-to-1. No, you have to. I always end up being a dick. Sorry, I'll be nice. That's because they can't predict price. That is the problem. It's a 50-50 shot, so their target's going to have to be bigger than the stop losses. Then the issue becomes the chances of you hitting a bigger stop loss, a bigger target, and then your smaller stop loss. Now you're losing 50-50 chance. You're going downhill there now because your target's bigger than your stop, so it's less likely to get hit first. So then you throw in a MACD. Oh. Okay, I'm done. I'm done. But anyway, yeah. Point being, as far as taking profit, is that the best thing you could do, rather than set 1-to-1 or whatever, or set targets, is to read the probability as things are moving along and take action based on what the chart's telling you. So, and those have been here a while. It's like that saved us from losses when we're up a small amount, but it's not looking good, and you get rid of risk. And we've seen that recently. That happened on Tuesday. Good trade. Suddenly, no, this is not good. Get rid of risk. And the thing would have been, a loss. All right, I guess I'll call it a day here, since we know what we're doing. I could pop in the chat. There's also potentially the GU setup, right? Great session, love the commentary. Cool. Glad you like. Yep. It doesn't get much better, if I may say, as far as really understanding what's going on. Well, all right, and we're done for the week. So I'll probably see you guys in the chat. And that's it. Otherwise, see you Tuesday. Have a good weekend. Usually when I close the webinar, the trade starts moving, so look out for that. Okay. All right, guys, cool. See ya.